Hello, ladies and gentlemen. I hope you are fine wherever you are. I am your number one online Acca tutor, Mr. Jerry Timakulu. In this video, we are continuing with our week 9 lecture series for the Acca paper financial accounting to those who are studying with us at Transcal Consulting Services or simply Transcal Business School. Alright, in this video, we are inclined toward the statement of cash flows as enshrined in the International Accounting Standard number 7 statement of cash flows. Now, in our previous videos, we touched a lot of things. We first looked at selected accounting standards, namely International Accounting Standard number 38, which talked about intangible assets. We then moved on to IFRS 15, that is revenue from contracts with customers. Those videos are there, and then we then tackled issues to do with IFRS 3, business combinations, and IFRS 10, that is consolidated financial statements. Those ones were looked in two parts. The first was inclined toward the group statement of financial position, which was a bit long, and then we tackled the group statement of profit or loss and other comprehensive income. We also touched using two dedicated videos to the goodwill. Okay, we discovered that goodwill is problematic, and we had to devote about 2 videos again in this lecture series for week number 9. Now, in this particular video, as I've already pointed out, we are inclined toward the statement of cash flows. So by the end of the video, you should be able to define what a statement of cash flows is and also outline its purpose. Alright, you then have to be able to prepare the statement of cash flows, including an appreciation, showing an appreciation of the 3 main components of this statement. Okay, so to begin with, what is a statement of cash flows? What does it show? What does it represent? Okay, a statement of cash flows is a statement prepared to provide information on cash generated by an entity and how it was utilized in the reporting period. So basically, a statement of cash flows, let me try to scribble something here. All right, my pen seems to be a bit dull and not visible. Okay, we are simply saying that this statement provides information on how cash was generated. Okay, on how cash was generated and then utilized. So basically, that's what a statement of cash flows does. All right. Now, this statement focuses on cash and liquidity. All right. It highlights movements in liquidity, movements in liquidity. All right. Thereby allowing users of financial statements to see how cash was generated and utilized. So, for example, the company may have issued shares during the year, but the cash balance at the end of the year may be lower than at the end of the previous year. An ordinary shareholder may be puzzled by this, but the explanation could be that the company had very large expenditure on non-current assets, and those expenditures would be presented as cash outflows in the relevant section of the statement of cash flows. So whilst we in the notes to the financial statements, the directors would have disclosed that we made a a large, a large issue of shares. All right, we offered a large issue of shares uh, to the public, and we made some money. However, uh, if the directors, if the shareholders look at the balances as reported in the statement of financial position, the balances of cash or bank balances, they would be shocked to see why the balances are so low. But as they review the statement of cash flows, they would appreciate that although there was this amount of cash which was uh, generated from the issue of shares, there is also an explanation on how that those funds were utilized. So that's the purpose of the statement of cash flows. Okay. To you as an accountant, um, this may be obvious from inspection of the statement of financial position, but a statement of cash flows will make it more obvious to the shareholder. Okay, while these accountants might simply appreciate them just reviewing the statement of financial position, uh, external parties like shareholders might as well be assisted with the statement of cash flows, as it usually gives explicit information about how the cash was generated and then utilized. Okay. Now let's talk of the presentation of the statement of cash flows. Statement of cash flows, that is International Accounting Standard number 7, requires cash flows to be reported under 3 headings, indicating the source as follows. We have got the first heading, cash flows from operating activities. This relates to the main income generating activities of the entity. Then we have got the cash flows from investing activities. This involves the purchase and disposal of non-current assets. Lastly, we have the cash flows from financing activities. This regards how the business finances its expansion through shares and non-current liabilities. Okay. Now, there are 2 methods which apply when we consider the presentation of the statement of cash flows. We have got what is called the direct and indirect method. Okay, so let us first have a look at the direct method of presenting the cash flows. Remember, only the operating section is applicable when it comes to these 2 methods, the direct method and the indirect method. Okay, so these methods only apply to the operating activities. Okay, but by the end of the day, both methods should lead to the same conclusion or to the same figures. All right, the net cash outflows or cash inflows from operating activities should just be the same, regardless of which method that has been used. Then from there, the rest of the section of the statement of cash flows would follow the same pattern. Okay, so let us look at the direct method template. Now, under this method, cash flows are reported under major classes of gross receipts and gross payments. The section would look like this. Okay, the heading is just the same, cash flows from operating activities. Then there is cash receipts from customers. As you can see, it's a positive figure, signaling that this represents the cash receipts. All right, let me try to find a pen that is a bit visible. Okay, you can see that this figure is a positive figure, signaling that these are cash inflows. Then cash payments to suppliers, a negative figure. Cash payments to employees, a negative figure. Cash payments for other expenses, negative figure. Interest payments, negative figure. Tax payment, negative figure. And then we get our ultimate net cash flows from operating activities. And as I have emphasized, this figure should be the same as the figure that is obtained when we use the indirect method. Okay, here is the indirect method, ladies and gentlemen. Okay, under this method, cash flows are calculated by adjusting the net profit before interest and tax for non-cash items and movements in working capital during the reporting period. So this is how it looks. We start with the profit. The heading is just the same. Okay, the heading, the cash flows from operating activities, and then profit before interest and tax. This one is just obtained from our accounting statement of profit or loss. Okay, we take the profit before interest and tax, and then we add or deduct non-cash items such as depreciation, profit on sale of non-current assets. All right. Then if we are having depreciation, we have to add it back. If we had made a profit on the disposal of a non-current asset, we then have to deduct that one, because when we were calculating the profit before interest and tax, we had initially added it. All right. So because profit is a non-cash item, we then have to deduct it to arrive at the real cash flows. Similarly, depreciation would have been deducted when we were calculating the profit before interest and tax, but we know that depreciation is a non-cash item, so we have to add it back. Then we have to adjust for working capital. Okay, working capital adjustments. Increase in current assets is an outflow, whereas decrease in current assets is an inflow. Increase in current liabilities is an inflow, while it's decrease in current liabilities, that one is an outflow. From there, we then have to do the same. Interest paid is an outflow, tax paid is an outflow. Then we get this ultimate figure, the net cash from operating activities. This figure should be the same as that figure which we obtain when we are using the direct method of cash flow preparation. Now, let us look at the model statement of cash flows. Okay, the full model. This is just a template, but remember, this one is following the indirect method. Okay, the template is based on the indirect method of compilation. Indirect method. Okay, we start with the profit before tax, and then finance costs, investment income, depreciation. We continue as usual. Okay, then we then move on to the cash flows from investing activities, where we look at the proceeds from disposal of property, plant and equipment or non-current assets, then purchase of non-current assets, the property, plant and equipment, interest received, that is from other investments, okay, or other interest income investments of the business. All right, and then dividends received. Okay, dividends received, say from things like our associates and so forth. Okay, whatever dividend we receive, we have to input it there. Then the net cash used in investing activities. All right, then we move on to the last section, cash flows from financing activities. Here we look at the issue of shares. Okay, the issue of shares, you can see it's a positive figure, and then the repayment of long-term borrowings, outflow, proceeds from long-term investments, these ones, long-term borrowings, then this is some income. All right, and then dividends paid, then that's an outflow when we pay our shareholders, so forth. Okay, just taking it back to the cash flows from investing activities, you could see that when we dispose of an non-current asset, we get a positive inflow. All right, and then when we purchase a non-current asset, that's an outflow, and then interest received is income, dividends received income. That's an inflow. Okay, then finally we get this figure could be negative. Usually it is negative, suggesting that the directors are investing in new non-current assets and so forth, right? But we would also want it to be positive to show that we are getting something from those non-current assets. Okay, and finally, okay, at the under the cash flows from financing activities, we've got this figure, all right, and usually it is positive, but sometimes it can be negative. Then after we do our additions, okay, in this column, in the outer column here, we have to add them up, and we should arrive at this particular figure, which we refer to the net increase or decrease in cash and cash equivalents. It is a net increase if it is a positive figure, but it could be a negative figure, and in that case it becomes a net decrease in cash and cash equivalents. Then we have to add the figure with the cash and cash equivalents at the beginning of the period. Okay, this figure is from the statement of financial position at the start of the year. Okay, let us say you are given statements of financial position for the 2 years, that is 2020 and 2019. Okay, so cash and cash equivalents at the beginning of the year would be the cash reported figure or bank reported figure for 2019, whereas the cash and cash equivalents at the end of the period would be the cash and bank figure for the year 2020. Okay, now these figures, although we know that we can just simply pick them from the statement of financial position given by the examiner, they should come naturally as you prepare your statement of cash flows. Okay, they should just come naturally. All right, for example, after you add up, I said that you get this figure. After you add up this last column, the figures in the last column, you should arrive at that figure. Okay, then when you this figure, okay, this figure, like it or not, you just have to pick it from the statement of financial position of provided. So when you add this figure and this figure, you should automatically get this figure. Okay, you should automatically get that figure, and then when you get that figure, you then have to compare with the actual figure reported in 2020 statement of financial position to see if you have done your statement of cash flows correctly. Okay, and I think we should now do a real example to see if we have mastered the concepts, or we can improve from where we are to that stage. Okay. I've already hinted out that whichever method which you have used in your calculation for the cash flows from operating activities, whether the direct or indirect method, you should come to the same figure. Okay, you should achieve the same figure when it comes to the net cash flows from operating activities. All right, now let's just look at example Kimberly to see what we can get. The following are the financial statements of Kimberly Ltd for the year ended 31st December 2012. We have got the statement of comprehensive income for the year ended 31st December 2012, where we are given the revenue of 900,000, cost of sales 475,000, gross profit 425, and you can see the operating expenses of 220, interest, and then loss on sale of equipment 2,000, and we get our net profit figure of 125,000. We then have the statement of financial position where we've got the non-current assets. Okay, there's land, there is 2020 2012 and 2021 financial years. All right, the land in 2012 was 55, but in 2021 it was 80,000. All right, and then we've got all that information, and the current assets. We've got stock 50,000 and stock 0 in 2011. We've got prepaid expenses, debtors, cash, and then equity and liabilities, where we have got ordinary share capital, retained income, okay, and current liabilities and non-current liabilities, as you can see there. Now, this is additional information we are given. Depreciation amounting to 33,000 and amortization of prepaid expenses of 2,000 are included in operating expenses. Equipment that cost 41,000 with a book value of 36,000 was sold for 34,000. Dividends of 55,000 were declared and paid during the year. Prepare the statement of cash flows for Kimberly Ltd for the year ended 31st December 2012. All right. For the purpose of learning, we are going to do the operating activities section, okay, using both methods as we have elaborated, so that in any examination, when a cash flow statement has been asked, nobody should be found wanting. Nobody should be found wanting. All right. I'm also going to upload this question on the link provided to this video in the description of the to this video, so that you download it and then follow me as I would be doing the question, okay? Because without that question in your hand, it is difficult for you to comprehend nicely all the workings and presentations I would be doing. Okay, now let's start with the direct method. Okay, let's start with the direct method. Okay, the trick is you need to know the template. Okay, you need to know, all the relevant elements that should, at least the major elements that should occupy your section for the cash flows from operating activities. The first thing, you just have to slot in the heading. Okay, cash flows from operating activities. Okay, and we can use a much darker pen. All right, and we can have at least 3 columns. The first column can be for notes, then dollar sign, dollar sign. Okay, we start with the cash receipts from customers. Cash receipts from customers. All right, and we need to do some workings, because from the information provided in the two financial statements given by the examiner, the statement of profit or loss and the statement of financial position, there is no way, there is no figure given expressly, okay, as receipts from customer, which means you need to do some little bit of workings to get that figure. All right, so let us open some workings here. Workings. All right, now working number 1, receipts from customers. Receipts from customers, or cash receipts from customers. All right, this one is given as opening debtors plus sales, okay, Opening data plus sales minus closing data. So if we go to the question, um, the data are a statement of financial position item. So you go straight to the statement of financial position and locate the data. Opening data, we know at this level that uh, the opening figures are for 2011. Remember, this part of the statement of financial position is 2011 and this one is 2012. So the data's opening data were 25,000, okay, and closing data 67,000. And then our revenue is found in the statement of comprehensive income or statement of profit or loss. The revenue was 900,000. So those are the three figures which we need for now. So we get back to our workings and say opening data from the question, this was 25,000 plus revenue 900,000, okay, minus closing data which was 67,000. And then we use our calculators and we should get just $858,000. These are the receipts from customers. So we take this figure and slot it in here. 858,000. Okay, 858,000. Then we need cash payments to suppliers. Cash payments to suppliers of goods. Okay, if they are suppliers for utilities, usually we give them, we put them in the section of other payments. Okay, here we start with the payments to the core businesses. To the core issues of the business. Okay, that is that, ladies and gentlemen. I'm sure you are flowing with me. I'm sure we are together as we term this accounting journey. All right, so I'm sure we are moving. Now let us do the computation for the payments to suppliers. This is again another working, because in the two statements provided by the examiner, such figures have to be found through workings. So cash payments to suppliers of goods. Cash payments to suppliers of goods. This figure is determined by opening creditors, obviously. Okay, opening creditors plus purchases during the year minus closing creditors. All right, so opening creditors, let us look at that figure in the statement of financial position. Our creditors, the opening ones were 40,000, the closing ones were 33,000, and our purchases now, we go to the statement of profit or loss, and this is the statement, ladies and gentlemen. We are only given the cost of sales. So how do we get the purchases figure from this? All right, we know that purchases, we know that please allow me to do the workings inside this statement. Okay, purchases is equal to all right, okay, If we do that one, if we start from that angle, we are going to confuse a lot of guys. So let us make purchases subject of the formula. All right. So we know that cost of sales is equal to opening stock. Okay, opening stock plus purchases minus closing stock. All right. So we know that cost of sales is given as 475,000 is equal to opening stock. The opening stock is given in our statement of financial position here, where we are having the opening stock was 0 and closing was 50,000. So 0 plus purchases minus 50,000. Just verify. Yes, 50,000. Okay, so let us make purchases subject to the formula here. Therefore, purchases is equal to, if we put purchases on this side, okay, so it simply means that is equal to 475,000 minus plus 50,000, because only the 50,000 has changed position. So purchases obviously would be 525,000. Okay, you could call this one in your examination, you could have made this as a separate working, let's say working number 3. Okay, so we now have working number 3 that has given us the purchases figure of 525. All right, we get back to our workings and say cash payments to suppliers. We now use the creditors figure, the creditors figures, the opening creditors and closing creditors. If you go back here, we had discovered that the opening creditors were 40,000 and the closing ones were 33,000. So let us slot in those figures. So we are saying 40,000 plus purchases. We discovered them as 525,000. That was working number 3, minus closing creditors of 33,000. Let me just cross check these closing creditors. Yes, they are 33,000, as you can see here. Okay. Now let us use our calculators to determine the ultimate payments to suppliers of goods. Okay, we are saying 40,000 plus 525 minus 33,000, and that should give us 532,000. 532,000. So we slot in this figure in our cash flow statement. Okay, 532,000. That's the figure which we have discovered, but remember this one is an outflow because it's a payment. Then what about payments of other suppliers or payments to other suppliers or creditors? Okay, how do we determine this? All right, that's the main point of contention, because we need to be systematic in the way we do our computations so that there could be some audit trail. Otherwise, if we fail to give up some logic in our computations, then we are going to be in trouble with the shareholders or the directors or the auditors. Okay, so let us. So here you could, in the notes, say put the working numbers. All right. So let us put this one as working number 4 because we've done working number 3 for the purchases. So obviously for the east it should be working number 4. Working number 4, payments to other creditors. Payments to other creditors. All right, and this could be given as operating expenses less non-cash expenses. Okay, less non-cash expenses. Less non-cash expenses. The treatment here is a bit different from the treatment when we are using the indirect method. So please do not be confused. So far, just take it as it is as we flow. Okay, just flow with me. All right. The operating expenses figure is given in our question was how much. Let us get back to the statement of comprehensive income or statement of profit and loss. You can see that the operating expenses were 220,000. So let us take that figure, 220,000 minus non-cash expenses. Okay, minus non-cash expenses, and the non-cash expenses we had depreciation. Okay, we're given depreciation there, this one, and this amortization of prepaid expenses. All right, so that's 33,000 plus 2,000. Okay, that's 3,000 minus 2,000. Okay, these were the non-cash expenses. Okay, it was 33,000 plus 2,000. Okay, just the same. So we are going to get how much there? 185,000. So we slot in figure 185,000. Then we need to establish how much interest was paid, how much taxation was paid. These workings, you can as well import them um, from. I mean, they are just similar to those which could be done when you are doing the indirect method. So interest paid. The question should lead you. Okay, you could verify from the additional information if there is any information related to interest payments. You can see that here there is none. Then you get into the statement of financial position to see if there are other interest payments outstanding or payables. You can see from the statement of financial position there is none like that, nothing like that. Then you move on to the statement of profit and loss, and you can see that there is this particular interest. All right. So the assumption here is that the interest is reported in the statement of profit or loss is considered paid, as we have got no interest payables is reported by the statement of financial position. So the assumption is that the interest was paid. All right. So interest paid 18,000. Then we move on to tax paid. The tax paid, just do the same process. Are there any other information about taxation? You can see that there is nothing. Then in the statement of financial position, are there some other tax payables? Income tax payable. You can see that there is none. So the entity was actually paying taxation in the year in which it was occurring or it was incurred. So the presumption is that the 65,000 taxation reported was paid. Okay, 5,000. So we do our computation there. 858,000 minus 532 minus 185,000 minus 13,000 minus 65,000. We should get the ultimate figure as 63,000. This is the net cash flows, net cash inflow from operating activity. Okay, so we've done, I mean, what was required in terms of the direct method. So let us see if we do the indirect method, we can get the same figure of 63,000. So right away, let us get to the business. Okay. Now, we can as well have our three column. Okay, not dollar sign, dollar sign. All right. We have got the first section is the cash flows from operating activity. Okay, and we start with the profit before tax. Profit before tax, and we get, we go back to our statement of comprehensive income. All right, and the profit before tax was 190,000. The profit before tax was 190,000. So we plot in that figure. Okay, and then we make adjustments to non-cash items. Okay, we can first group them systematically, but in the exam you might not be having that time to group them. Just have to attack an element as you come across it. But here, for the purpose of teaching, we are just going to start by adding, by those items which require some add back. So depreciation, and it is given in the question as 33,000, if you still remember. So you can tell the examiner this is given. All right, that's 33,000. We are adding back, so it's a positive. And then there was some loss on disposal. All right, you can call this one working. Let us call this one working number 5. Okay, working number 5, disposal of PPE. We are told that there was an equipment that was disposed. All right, the cost of the equipment was 41,000. But what we know is, to determine the profit or loss on disposal, we simply say proceeds on disposal, or from disposal of PPE. The proceeds were how much? It was sold for 34,000. What about the carrying value? The carrying value of the asset. Okay, proceeds less carrying value of the asset. The carrying value is the 36,000. a loss of $2,000. So loss on disposal. There was a loss on disposal, excuse me, a loss on disposal of 2,000. So we slot in that figure here. We say loss on disposal. The loss is a non-cash item. Okay, working number 5, 2,000. All right, 2,000. We have to add it back because when we were calculating the profit before tax, we had reduced the profit because of this expense, but it was a non-cash item, so we have to add it back. All right. If you go back to the statement of financial position, you could see that there was a movement in terms of the prepaid expenses. They were 5,000 initially. Okay? They were 5,000 initially, but they had gone to 3,000. So there was a decrease in the prepaid expenses. That's an amortization of the prepaid expense. So that decrease should be accounted for. So that's difference of 2,000. Amortization of prepaid expenses, 5,000 minus 3,000. We are talking of 2,000. We have to add it back. Then items which we should lessen. The items we should lessen. These include working capital movement. All right. Let's start with the stock as given. We started from 0 to 50,000. So there was an increase in stock. All right. Increase in stock, 50,000 minus 0 plus 50,000. This increase in the increase in current assets is an outflow. That should be the rule. Okay, the increase in current assets is an outflow. Then increase in, okay, let us confirm if there is an increase in debtors. All right, our debtors from 25,000 to 67,000, there was an increase. So increase in debtors. Debtors are receivable, they are current assets. So they should be considered as an outflow. 67,000 minus 25,000. All right, and using calculators, we should get 42,000. But remember, the increase in current assets should be considered as an outflow. Then we have got creditors. We have got creditors. Aha! Somebody might be worried and say, why are you ignoring cash? Alright, cash is the item here we are preparing the statement of cash flows for. We need to see how the cash was generated as well as how it was utilized. So we can put again the cash figures in the computation of the statement of cash flow. By the end of the day, we are not going to have the basis for comparison or for checking. So the cash is the subject matter, the reason why we are preparing the statement of cash flow. So do not make the mistake of extracting the cash flow figures there, the cash figures, and plotting them in the statement of cash flow computation. You need only to extract them at the end of the statement of cash flow as you do your um, cash and cash equivalent computation. So don't make that mistake. Leave it like that. Then there could also be somebody who say, suppose I had just ignored treating the prepaid expenses amortization um, in my computation. Later, suppose I just considered the prepaid expenses as assets. What could have happened? Right? What could have happened? Here we had added them back. As you can see, we had added them back. What if I wanted to treat them as just working capital movement? You are going to get the same answer. Alright? Let us do that and see, just for illustration purposes. Alright, the prepaid expenses here, they let us consider them as current assets. They were 5,000 at the start of the year, but at the end of the year they were 3,000. So there was a decrease in current assets. A decrease in current assets is going to give us an add back. Okay, it's an inflow. So we're supposed to write here decrease in current assets. Okay, we would have just say decrease in prepaid expense, and 2,000 was still going to be added back, as you can see here. We're not going to deduct it, but to add it back. So the impact is just the same. Alright, please don't be confused. Alright, let me just try. The problem with this software I'm using now, it doesn't want me to erase a lot of things. It might start to misbehave. Alright, let's move on to the next item. Alright, the creditors. Was there an increase or decrease in creditors from the question? We started with 40,000, but ended up with 30,000. So there was a decrease in creditors. Decrease in creditors. Okay, decrease in creditors from 40,000 to 30,000. That's 7,000. Can someone tell me, is this an outflow or inflow? Obviously, this is an outflow. Why? Because we paid our creditors. We paid up our creditors, so money left the business. Alright, that decrease shows that we were paying. Alright, so we just have to, we make our additions there. We should get some figure. Let us use our calculators. So I'm getting 128,000. Okay, now with that figure paid and interest paid, so interest paid, in this case the circumstances are just the same. Okay, as we are using the same information, so we're just going to slot in the interest paid figures. Okay, we're just going to use the interest and tax paid figures. However, for us to use, to worry about the interest paid, that would be some form of double accounting. Okay, that would be some form of double accounting, as we have started our computation at the profit before tax. Had we started with the profit before interest and tax figure, we were then supposed to just deduct the interest paid. Alright, so in that regard, we just have to do away with the interest paid and only focus on the tax paid. So the tax paid figures was how much from the question? This was 65,000, so we just have to plot in that figure. Okay, and if you deduct 65,000 from 128, you should get your just 3,000. This is the figure for the net cash flows from operating activity. This should be the same as the figure which we discovered when we were doing our direct method. You can see this is the same figure. Okay, now let us complete the rest of the sections of the statement of cash flows to see if we can balance this statement. Remember, it should balance. When it balances, the the ultimate figure, the ultimate figure, okay, should be equal to this figure, the closing cash balance. So the statement of cash flow should actually confirm that that was the figure of all the cash and cash equivalents for Kimberly Ltd. So after everything we do, we should get that figure. Okay, so let's move on. Let's move on. We are now going to the cash flows from investing activity. Alright, so we still have our columns as usual. Okay, I've got the dollar sign, the note. So cash flows from investing activity. We know that by definition, the investment activity is that section that deals with the acquisition um, and disposal of non-current assets and other investments. So we should be vigilant. There should be some workings for the property, plant, and equipment to see if we had made some additions to our portfolio of non-current assets. Okay, so we need to establish that although we have got this additional information that talks about uh, the equipment that was disposed of during the year. All right, but we need to know, because if you look at your statement of financial position, you could see that there was a lot of activity when it comes to the equipment section there. Okay, so let us do the computation. So we can call that one working number 6. Okay, let's call it this one working number 6. Can we find a place to slot in our working number 6? Okay, since we need to have okay, let us slot our working number 6 somewhere here. Working 6, property, plant, and equipment. All right, we can just do a T account. Okay, let us make a T account, PPE account. Okay, we know that PPE are assets. Okay, so we have got the balance brought down, balance BG of assets. This one is the 2011 figure. Okay, according to the 2011 figures, we have got PPE values linked to the 2011 figures. Okay, and this was the value in 2011. All right, we had 58,000. Okay, we had 58,000. So you just have to plot that opening figure, and we say 8,000. Then we are told that we dispose of, okay, disposal. We dispose of the asset, but we dispose this asset at cost. Okay, the cost of the asset disposed of should be recorded. It was 41,000. We disposed of the asset that was costing 41,000, so we need to slot it in here. The asset that was disposed of 41,000. Okay, then we need also to consider the balance, at the end of the year. Okay, the balance of equipment at the end of the year. This was 183,000. Okay, balance CD 183,000. So if we add up, we should get to 24,000 to 24,000. So obviously, you can see that the debit side is in default, is in deficit. So that should be the cash balance, some addition. Okay, so the difference there should be 166,000. That should refer to or signal some additions to property, plant, and equipment. So we come to our statement of cash flows, to the cash flow from investing activity section, and saying PPE addition. PPE addition or purchase. That is working number 6. We are talking of, okay, you could just put working number 6 there. Okay, 166,000. This is an outflow. Okay, this is an outflow because we had bought those equipment. Then we should also record the proceeds from disposal of PPE. This one is given. Okay, this one is given in the question, and how was it given? It was given here. This equipment was sold for 34,000, so we got 34,000 into our pocket. 34,000. This should be a positive figure, okay, because it was money coming in. And then we have to record what else. If we look at our statement of financial position, we could also see that there was some movement. Okay, for the buildings, nothing changed. Okay, nothing changed there in terms of money. Okay, in terms of money, nothing changed. However, if you look at the land cannot be depreciated. All right. So if there is a movement from 80,000 to 55,000, therefore we can suspect that we have made some money. How can the land values go down? They shouldn't go down. So we need to see the money coming in. So just suspect that there was a sale of land. Proceeds from sale of land, 80,000. Okay, the land was initially costing 8,000, but it is now costing 55,000. So part of the land has been disposed of, and this should be 25,000. Positive figure. All right, and I think there are no more other issues relating to PPA. So we can rule out our figures and get the net value. So 166 negative 166,000 plus 25 plus 34, we should get negative 107. This is the net cash outflow from investing activity, or simply from investment. Okay, and then we go to the cash flows from financing activity. The cash flows from financing activity. All right, here we are looking at things like the issue of shares, sometimes at a premium, and the issue to do with the repayment of bank loans and so forth, or the raise of cash through debt, issue of debt. So in this case, we are led by the statement of financial position. All right, so if we look at the figures, the ordinary share capital, retained income, debentures, and so forth, we should be able to get some sense, to make some sense out of those figures. All right, so one thing that is visible is the issue of shares. Okay, we had share capital of 70,000, but it has increased to 230,000. So obviously there has been some there's been um, some issue of shares. So we come to our statement of cash flows and say issue of shares, issue of shares. Okay, from 70 to 230,000 minus 70,000 to 30,000 minus 70,000, we should get 150,000. Okay, and now we can look for other items like the repayment of bank loans or the issue of bonds or debentures. Okay, so we need also to be led by the statement of financial position. Also, other issues to consider are the dividends, whether we have paid any dividends or not. So we get to our statement of financial position and inquire. All right, the dividends are usually paid from retained income. However, if we had paid a dividend, we expect to see our retained income shrinking. But in this case, the retained income is increasing, which means the retained income is not the best source of our evidence. We can consult the additional information to see what's going on. So from the additional information, we are told that we paid dividends of 55,000. So we need to pick that and say dividends paid. This one is given expressly, or explicitly, that is 55,000. Okay, then we need also to verify the issue of non-current liability. they were 150, but they're now 106. So there should be some redemption of these debentures. So the difference should be a repayment or redemption of the debenture. So we get here and say redemption of debenture. The redemption is just the difference from 150,000 to 106,000, and this should be 44,000 negative, because suggest some repayment of the debentures, because they were long-term loan to the business. They reach such a point in time when they need to be repaid. Okay, so what's the net figure there? It should be 61,000 positive. So that's the net cash inflow from financing activity. Net cash inflows from financing activities. So we then have to add up all the figures in this outer column. Okay, starting from here, the 63,000 plus minus 107,000 plus 61,000. Okay, let me just try to use my calculator here. 63,000 minus 107,000 plus 61,000. We get 17,000. We call this figure the net increase. Net increase in cash and cash equivalent. Okay, net increase in cash and cash equivalent during the year. During the year. So in 2012, that was the increase which we sustained. Okay, then we have to add cash and cash equivalent at start of the year. Start of the year. At the start of the year 2011, that is in 2011, the cash balance in 2011 was how much? This was the cash balance at the start of the year. It was 38,000. Okay, this is the cash balance line. Okay, so at the start of the year, we had 38,000. Okay, so we pick that 38,000 and slot it here. Okay, if we add these two figures, we get 55,000. This is our cash and cash equivalent. At the end of the year. And this figure, as I have pointed out, this figure, the 55,000 you are seeing here, should be able, should tally, should be equal to the same figure, the closing figure for 2012, as reported in the statement of financial position, as 55,000. So this is why I said, do not pick the cash figures in your computation or adjustments for working capital movement, because the cash figures are the figures we want to verify with, or we want to support with the statement of cash flow. So the statement of cash flow is there to support whatever we are reporting with regards to cash in the statement of financial position. Okay? So, ladies and gentlemen, I hope you have been assisted. And when you feel like you need a tutor, all right, to assist you in your studies, please do not hesitate to contact me. I'll always be there for you guys, all right? I'll always be there and at your service. So, my numbers are, you can just call me anytime or just send a WhatsApp message on +263 774 596 or simply send an email to that email address. Okay, once you become a student, there are advantages, main advantages that you can enjoy. All right, you get access to exam tailor-made material in the form of notes. You also get continuous assessment advantage, where you'll be given exercises for every topic which you have covered. There are also some mock exams that are given to you before you sit for your examination. And there is also a 24-hour right round the clock tutor support, that whenever you get stuck along the way, your tutor is going to be on your side, which means you are not going, you will never ever go, I mean, you will never ever walk alone. Okay, you're not going to be left alone. The tutor is going to be by your side. All right. So if the video has been very helpful to you,